Now, if the first major influence on this budget has been meteorological, the second has been global. This is a new world of uncertainty. The global economy is volatile and it's unpredictable. There's a new US administration disrupting trade. There's a slowdown in China. There's war in Eastern Europe and a very fragile ceasefire in the Middle East. Division and dissatisfaction around the world. We've seen extreme market volatility in the US and elsewhere as a consequence. The S&P fell 10% since mid-February, pulling other markets down with it as well. Now, even in the most benign scenario, global growth over the next 3 years is expected to be its weakest since the 1990s. Overnight, the OECD downgraded its growth expectations for next year and the year after. And Treasury forecasts in our budget will have Chinese and American growth slowing to around 4.5% and 2% next year, respectively. The forecasts for the US are the same as the mid-year update, but the downside risks are weighing much more heavily now. Unemployment is rising overseas from higher interest rates, and in the UK, inflation's actually going up again. This is the global backdrop for the budget. But amidst all of this churn and change, we've been very careful to make a distinction between the cyclical and the structural. And by that I mean the fluctuations that we need to manage in the short term versus the big transformations in the global economy that require a longer-term response. And one of these transformations is the big shift from globalisation to fragmentation that we identified in our intergenerational report. It's clear now that the rules that underpinned global economic engagement for more than 40 years are being rewritten. The whole world has changed. We've seen that change accelerate since Inauguration Day in the US. Developments since then have not been surprising, but they have been seismic. And as a trading nation, Australia has a lot at stake. So the decision not to exempt Australia from American tariffs on steel and aluminium was disappointing, unnecessary, senseless and wrong, as the Prime Minister rightly pointed out at the time. We're not uniquely disadvantaged by these tariffs, but we deserve better as a long-term partner and ally. Our producers make amazing, sought-after, high-quality aluminium and steel, and they will diversify, but they shouldn't have to. Tariffs and escalating trade tensions are a form of economic self-harm. They are self-defeating and they are self-sabotaging, because more trade restrictions means less growth and more inflation. The Productivity Commission made that point today in the media. And the impacts of what we're seeing will not be confined to one industry or one community or one quarter in our economy. These were two of the core conclusions of the OECD's Outlook report released overnight. Trade barriers are a key reason why its economists now expect slower growth. And they think inflation will linger for longer across the globe. The risk of recession in the world's largest economy is rising as well. And all of this has consequences for us. Treasury modelled the impact of tariffs on our economy, and they did this before the US election, and they did it again after the inauguration of President Trump. Treasury estimates that the direct hit to GDP from steel and aluminium tariffs would be less than 0.02% by 2030. So the direct overall impacts on Australia should be manageable. But when you add in the indirect effects, the hit to GDP could be more like 0.1% by 2030. In fact, over a whole range of scenarios, Treasury found the indirect GDP impacts of a trade war could be up to 4 times larger than the direct impacts of tariffs on our own economy. So in a world of retaliation and escalation, the impacts of tariffs are amplified. They linger for longer, resulting in a bigger reduction in GDP and bigger increases in prices. Now, our response as the Australian government will not be a race to the bottom on tariffs. We will go for more resilience, not for more retaliation, because more and higher tariffs would harm, not help, our workers, our businesses, our industries and our economy.